Hello, everyone. Happy Friday. Welcome to Stable Stories. It is a series that we've been running now for several months, exploring the stablecoin market. I am serving as Chief Normie, asking all the questions that everyday people might ask, and helping illustrate this very important space. And each other week rather, we've been exploring a different topic, talking about headlines, what's going on in stablecoin industry, but also doing a deep dive on a particular subject. With today, us going into Latin America, and we've got a great panel. For everyone who is listening live, thank you so much, and for everyone who's going to listen to this recorded space in the future, thank you from the future. Hopefully things are great at that time. So I think it would make sense for us to start off with some quick introductions, some returning guests, which is always great, but get into some intros, talk about some headlines, some important news that's coming out in the industry, and then maybe get into our core topic. So why don't we start off with Reid, head of stablecoins at Bitso. If you could do a quick bio, that would be great.
Sure. Hey, everyone. I'm Ben Reid, head of stablecoins at Bitso, as well as Bitso's issuer subsidiary called Juno. What that means practically is I'm kind of the GM of our stablecoin issuance business, and I also lead aspects of strategy just in terms of kind of navigating the stablecoin space, working with other stablecoin issuers, decisions about stablecoins on Bitso, and things like that. Thanks for the invite to be here.
Absolutely. Quick follow-up, Ben. Do you feel better after the Federal Reserve meeting that took place today, or worse?
Looking at my portfolio, I feel worse. At least when a year or an hour ago, I felt better. However, in terms of if this is what you mean, in terms of an issuer that primarily monetizes issuance through yield on reserves, I think there's like a little bit of a counterpoint there, but all in all, probably still a good thing.
Fair enough. Fair enough. I love the tempered perspective. Let's go over to Aaron Stanley, founder of Brazil Crypto Report. If you could do a quick introduction as well.
Hey guys, nice to be back on the show. I think I was on maybe a month or two ago, so it's nice to be back. Appreciate the invitation. So yeah, I do. For the purposes of this particular engagement, I have a podcast and newsletter, kind of a small micro media platform called Brazil Crypto Report. That's is English language content focusing on Brazil and to some extent the rest of Latin America, but primarily Brazil. So yeah, we're talking a lot about stablecoins lately, just that's kind of the hot thing. Yeah, I think also we'll be going to the Bitso stablecoin conference in Mexico next week, which I think was the maybe the timely reason why we spun up this spaces here, which Ben and his team are kindly hosting. So yeah, excited to talk all things stablecoins today.
Don't be so modest, Aaron. What did you just say? Like a small little media outlet that maybe covers a place in the world called Brazil. Come on, it's the media outlet covering crypto in Brazil. And who doesn't know Aaron Stanley? Give yourself a little credit there.
Well, I'm from the upper Midwest, right? It's where we're all about modesty,
Minnesotan humbleness.
Yeah. You can't talk yourself up. But I paid Ben to say nice things about me in this space, just if you guys were wondering. So anyway, thanks for having me. Excited to be here, and thanks for the kind words.
I can empathize. I am from Illinois and also am unable to say nice things about myself. So right there with you. Let's go over to Dave Taylor, CEO at Etherfuse.
Hey, yeah, I'm Dave, CEO at Etherfuse. We focus on short-term treasuries issued as, I would say, reward-bearing stablecoins. Our major focus is non-US. So we have Brazilian, Mexican, European, US, and British, and we'll have the top, I'd say, 30 currencies in the world issued on chain by Q4. So our major focus is to issue those and bring them to the world and get a safe store of value, but also some yield denominated in foreign currencies that can enable exchange and FX to happen on chain. Great to be here.
Yeah, thank you so much. And lastly, a frequent guest, Fran from over at Stabull. With for those of you who haven't met Fran, it'd be great to hear from you. And if you have any key updates on Stabull as well, now is a good time to share them.
Yeah, always good to be back. Thanks for hosting us as always. I'm a core contributor to Stable Finance, which is a multi-chain AMM specifically optimized for stablecoins and RWAs. So, the thesis of $10 trillion over the next decade moving from the real world or the old world into DeFi, crypto, Web3, etc., and being able to program money and do more things with your value once it's on chain. So we're loading up pools for various different issuers here and beyond so that they can swap one asset to another efficiently, or they can dust their assets off and get yield on their products. So we're very excited to go to the Mexico conference next week. For those that don't know, it is stablecoinconferencelatam.com. Get yourself a last-minute flight and a ticket and join us there. Ben and the team at Bitso has done a phenomenal job of amassing a huge list of reputable speakers and investors, issuers, operators, etc., to network with and discuss the future of stablecoins. So, yeah, thanks for having me back on.
Absolutely. So there are three stories I wanted to highlight. Two, perhaps folks have heard about, and one I think it's worth getting into a little bit further. First of all, MetaMask made a fairly large announcement. They're getting into the USD stablecoin business with MUSD. A lot of pithy replies and reactions to that has been, oh, here's another USD product. Personally, I think it's a good thing, right? We have a lot of banks, we have a lot of credit cards. Competition is good. We should have a lot of stablecoin competitors, and so this is another one. And given how many people use MetaMask, I think they're going to make a pretty good run at this. Secondly, we've got Stripe building their own L1 payment blockchain in partnership with Paradigm. So, skirting around leveraging another existing blockchain, Stripe and its $1 trillion network. I don't know. They make a lot of money and process a lot of money. Just decided we're going to do it ourselves, and personally can't really blame them. So, that was pretty massive news a few weeks ago that came out. And then the one story I wanted to highlight, and Ben, it would be great to hear from you a little bit on this, but there is a partnership between Bitso and Atmos. So maybe you could talk a little bit about what that is, why does it matter, why does it make sense right now?
Sure. So I think you mean Aptos. So it's the Aptos blockchain.
Sorry, my bad.
Yeah, no worries. And yeah, we just made an announcement that we're supporting. We'll be supporting to begin with USDT, USDC on Aptos. It's a pretty straightforward premise. I mean, look, we've had a kind of a front row seat to the activity in LATAM, stablecoin growth that sort of informs Bitso's business decisions the past few years of getting into cross-border payments, issuing stablecoins. And it's just from that perch, we kind of can both hear from customers about what they want and like what chains are using. And at the same time, I don't know if you guys have seen this, this kind of gets into the chain topic that's going to come up about the L1 chains, but like there's a lot of chains, existing chains, new chains that are like, we're a stablecoin chain. We're optimized for payments. We're a stablecoin chain. And I think there's some, you got to like sift through it to figure the chaff from the wheat. But Aptos is a pretty strong chain. Like there's a lot of things they have going that they're kind of optimizing, and they're doing some things to really focus on payments in particular. And so it's just with that in mind that it made sense for us to support it. For an exchange like Bitso, adding chain support for tokens like USDC and USDT that are just foundational to the experience is like a big lift. It's not like a simple thing, just like, oh yeah, let's just expand to all the chains out there, and we'll just support 20 chains for USDC or however many it's on. I don't know. I'm sure you can do it on a lot. So it is kind of a big lift, but it's as simple as we will support those tokens on that chain. And there's certainly some more like marketing and promotion and stuff that Aptos has to drive volume, incentivize usage and stuff like that. But at the end of the day, it's as simple as supporting supporting Aptos on the most used stablecoins, most used USD stablecoins on our platform.
Amazing. Well, makes sense. And to that point, and the news from Stripe as well. Just open commentary from anyone if you guys want to chime in. But yeah, any thoughts on sort of the growing amount of competition both on the L1 side and for stablecoins as well?
I think. Sorry.
Yeah.
I think one thing it really highlights is the I don't know, my bullishness for bridges. I do believe it's going to be a cross-chain world, and so most of your products should anticipate that and expect that in the future. I think liquidity and depth of liquidity is really going to matter in the future. I think people like Stripe have it. I think Circle has it, so they understand that. They can drive like the best incentives and the best rates through that depth. So I just think it's going to get worse in the fact that there'll be more fragmentation, better in the fact that there will be more options. So it's just something we need to anticipate.
If I can chime in, I would love to be a fly on the wall as some of these large megalithic corporations, the size of Stripe these days, sit around with a whole room full of $10,000 a day PwC consultants who are probably just using AI in the background to advise them about how to enter a market and create a moat. It's like there was a U.S. states that announced at a state level they're issuing their own USD stablecoin. That was 2 days ago as well. So, it's like the Oprah meme. You get a stablecoin, you get a stablecoin, everybody's making their own. And I totally agree with Dave there. Like it's a bridged future. People are trying to carve out their niches, their moats, their forts. I mean, from our perspective, Stabull, it will list anything and allow for seamless swaps from one asset to another. As a sort of basic infrastructure provider, there's no point sort of dictating who we think is going to become the market winners. I think it'll just be broken up regionally. I mean, you got, completely different landscape over in China with the digital yuan. You got the European euro being touted now. You got Ripple and SBI doing big things and stable coins and cross-border payments. So I think it's going to be like a fractured world, but we're talking about a $10 trillion FX pool that is moving on chain. So there's plenty of sort of meat on the bone for various different operators to carve out different regions and verticals and all the rest.
Yeah, I'll add in. It's funny that both the stablecoin, like the MetaMask news, as well as the L1 news, like there is a knee-jerk reaction that's like, oh, another one, like another US stablecoin, another L1. Why do we need this? It creates fragmentation. I think if you at some level, if you just really take a step back on, to use an Elon Musk, a board Elon Musk favorite, like a first principles, like what's happening here? This is just entities saying we want our piece of the pie is the way. That's like one take. And it's funny that it's being addressed in a few different ways. One is like, okay, we're big, we're driving volume, we want our piece of the pie, let's issue a token and then we can make money on reserves. Or let's issue an L1, let's make sequencer fees and stuff like that. There's other ways to go at it. And this is, I think, part of why you see, the domain of Tether of like, we keep all of our money, we never do rev share agreements or anything like that, it's kind of like an N of one. Like that doesn't exist, and I don't think it will exist. And you can see with Paxos and GDN and just talking to blockchains, like the rev share principle is alive and well. And so it's just two ways of going at it, right? It's like like Stripe could easily just demand rev share and join Global Dollar Network or something like that, or whoever, form partnership with Circle, but then they can also issue their own. And every company is sort of making their different decisions there. But I personally think that's like a big underlying thing. However, it points back to what Dave said, which is that like bridging and interoperability is kind of the key, because I can't imagine a world where we're like, it doesn't work to be in a wildcat banking world, right? Where like nothing's interoperable and everybody's just got their own little, Ben token, Ben USD and Bob USD and stuff like that. And in an ideal world, we're at a place where it's all abstracted away. And then Stripe can make their bag and Amazon can make their bag, whether that's through their own token that sort of is abstracted away in the background or through rev share agreements, and everybody's happy. But until then, I think it's going to be some messiness.
Yeah, I would agree with that that last point that Ben made there on the where it feels to some extent it feels like we're kind of recreating the like the pre-Civil War banking system in the U.S. just on blockchain, right? But where like there's kind of a gold rush right now. There's sort of a FOMO, right? And everyone's got to figure out their stablecoin strategy quick because now it's regulated, it's legal, it's above ground. Like every corporate boardroom has to have some sort of strategy, and maybe these guys are going to ChatGPT like Fran suggested and just asking it what they should do. Like, well, your own stablecoin, great. But hopefully they're putting more thought into it than that. But I think in the short term, it makes a lot of sense for these guys to do that, right? Because like you just have to, I think you just have to demonstrate that you're a player in the game, right? It's almost more of, you at least have a seat at the table, even if you have a stable coin that like maybe it works, maybe it doesn't, but at least you have a seat at the table, right? At least you're a player in the game. So I think that's important. And then I'll just finish my thought here quick, and then I'll turn it back. But like, I do think that the abstracting away component is going to be the important thing, right? Because the level of fragmentation. I mean, the bridges are already like. I understand why we're going to be definitely long on bridges here the next couple of years, but this has always been like just the scariest part of the blockchain world for most people, right? Is interacting with these things and bridging funds over and all this type of stuff. And to the extent that stuff can be abstracted away, and the end user is just transmitting, or they're sending one USD backed token for another USD backed token or whatnot, and they don't have to worry about that kind of thing. If there's service providers that are able to abstract all this stuff away, then great. But it looks like we've got a long way to go to get there, but I think we can. But I think I think the vision for Web3 of being this kind of like open, interoperable, system and everything, it's definitely at odds with this. That vision is definitely at odds with this sort of push by corporates to launch their own chains, launch their own coins, etc. But I think for those particular entities, it makes a lot of sense, right? But for sort of the ideologues out there, it's like, oh no, another sort of centralized chain that's that's not, this isn't really what we like signed up for when we got into this movement. But it's sort of inevitable, I would say. I do think it plays into this trend of like blockchain, like use case specific blockchains popping up across the spectrum of use cases. I've always held this this mindset or this mental model from back in like 2017, 18, where it's like blockchains they're like microchips, right? Like there's certain types of chips that are good for one thing, and there's other types of chips that are good for another thing, right? I think blockchains are going to be kind of the same way. So you're finally kind of getting that fragmentation of, okay, you have some chains that are popping up that are trying to be just like ridiculously fast versions of Solana. Like you're getting other chains popping up that are trying to be just for stable coins, et cetera. So I think we're finally starting to see that segmentation, and you're not seeing any of these, layer ones, or not as many of these new layer ones popping up that are trying to be like, the chain to end all chains, right? Or the chain for everybody type of thing. Anyway, I'll yield back, but some thoughts from me there.
Yeah, I think to look at it from another lens too, of why I think the fragmentation will continue is, if you look at the Genius Act, it does give like a regulated entity a lot of de-risk of regulation by providing a decentralized platform. So if I'm like Bitso, or if I'm like Coinbase and I have centralized exchanges, I have a lot of responsibility and a lot of compliance involved in listing assets. Where if I have my own chain, it's decentralized. According to what we've seen at the Genius Act, people can launch and issue assets on my chain without me being responsible for those things, or having to comply because I'm holding those assets on behalf of customers. And I think we'll see banks do it too. And I think in part this is why we're seeing stablecoins too. From everybody, if I wanted to hold bank accounts and deposits for people and make that available for people where they could earn yield on their money, that's really hard, and that's a long compliance process. But issuing a stablecoin is pretty straightforward now. And so I think that's why it'll continue and why we'll continue to see it. And I think right now we're seeing first movers like Stripe. They're pretty tech savvy, but I think we're going to see every bank, every fintech, every wallet do something to kind of compete in this space.
Yeah, I just wanted to chime in. The interoperability is going to be essential, and the fragmentation will continue. If you go deep into the Genius Act, it's almost as if this is sort of a transfer of power and the acts of fiscal and monetary policy from centralized private central banks to sort of the public. The analogy of the Confederate dollar pre-World Civil War is, what happened there was you had the Confederate dollar circulating for quite some time, and then various different banks created their own versions of USD, and then the greenback came along and consolidated everything. So the question is, will there be a great consolidation after a period of this kind of explosion, this Cambrian explosion of innovation where everybody's sort of testing out? But from a million-foot view, it sort of feels like this is the precursor for stripping the power away from central banks and moving the issuance of money back to state level, or the public level. We shall see, but it's going to be pretty wild as everybody makes stablecoins for a couple of years.
Quick follow-up on this before we shift to kind of the core topic, but do the brands of these L1s or the stable coins matter? So if you use the analogy of banks or credit cards, these entities would spend a lot of money to recruit you to put your money into Chase or spend money with Visa, Amex, whatever it might be. With L1s and with stable coins, I think that from a consumer perspective, it's going to get very messy and confusing, and perhaps that is just technology that lives in the back end. So does the brand? That's my question: is does the brand of these things go away, or are we going to see massive amounts of money going into trying to convince normies to somehow direct their stable coins to be on a certain platform versus the other? Or is that just not realistic? Kind of open question to anybody.
I think this is I don't know if this is contrarian or not, but in a world where interoperability is there and bridges are there, I think none of that matters. It's all going to be based off pricing. So if your liquidity and your depth of trading pairs is deeper, aggregators will find it. So in my opinion, I don't think it's going to matter that much. I think in the early stages it might, like Circle's probably garnered enough trust that people will use it. But down the road, once we can aggregate cross bridge for best pricing and best trades, I think it's to the limit, not important.
Yeah, I'd say I guess it depends how far down in my mind, how far down the conceptual adoption curve we're going with this analysis. Meaning, for crypto traders and people who understand it and follow the space, I 100% agree with Dave. And by the time it matters for your normie users, it might be moot because the interoperability is in place and they don't need to worry about it. To the extent it's not, that's where I think my take would be that the stablecoin does matter. The chain probably doesn't matter as much. I mean, if there's Stripe has a consumer brand in some sense for what it's worth, or at least a retail brand that's known among merchants. And so presumably they're banking that they're going to have some of the merchants who use Stripe's payment processing services who are going to be more comfortable to use their chain and or use Bridge's stablecoin over time than they will something else. And the same thing with Amazon. If Amazon gets into issuing a coin, the chain, if I just think through my wife could probably get to the place of having a viewpoint on tokens. I think a chain is just a bridge too far, if you'll pardon the pun. And I think for most normies, as long as it hasn't had a major hack, I can't see them having a strong viewpoint on which chain it needs to be. But because the token relies on distribution, and that distribution will at least be partially informed by who's distributing it, I do think there's a chance that brand actually matters. To the extent that any of these new start USD tokens are get traction, which again, that's why these big brands that have these big walled ecosystems are launching them, is because they do have some good chance to have some inbound or inbuilt distribution.
All right, appreciate the perspective, everyone. So I think it makes sense to dive into the core topic, which is Latin America, and obviously we've got a bunch of guys who are really focused and expert in that area. So First area I think is worth discussing is Dune.com put out a Latin America report recently. So just a couple of stats that I think can guide the discussion. The Latin American local stablecoin market cap reached 21 million last week. Latin American DEX volume reached 24 million in July. And I think for me, at least, this was the most interesting stat. 68.7% of all crypto volume in Latin America is flowing through CEXs, centralized exchanges, which I'm disappointed by, but I think that will change. But I think the core question, just kind of open it up to everybody, is what are the challenges right now in Latin America? It's obviously a massive market. We talked a little bit about that, but what are the challenges that are keeping the market, arguably smaller than it could be?
I can jump here, I guess. Yeah, I mean, I think, I guess, there are definitely some challenges, but I do think that there's been a pretty substantial, like, a lot of positive indicators on the usage front that, I think it's important not to overlook, both the usage of USD peg stable coins as well as localized, like, local currency stable coins. I know Ben and his team at Bitso have been issuing some of those. I mean, maybe you can talk about the Mexico one that you guys have. You launched it maybe 6 months or so ago. There's a bunch of them in Brazil now that have been getting quite a bit of uptake as well. Not so much for like a buy and hold purpose use case, but really more for kind of easy on and off ramping into the country. Using fiat on and off ramps and whatnot. There's been quite a bit of volume on that. But yeah, there's definitely there's in Brazil, there's definitely like a lot of regulatory things that are uncertain at the moment. The central bank was actually proposing a ban on self-custodied stable coins a few months ago. I think we may have talked about this on our last space that we did on this with BOREDELON here, but they're actually proposing a ban on self-custodied stable coins. So you could only trade stable coins, or you could only move stable coins around via licensed centralized exchanges, basically. So like licensed exchanges and banks, but you couldn't transfer these coins to your MetaMask, for example. The bank seems to have like be reconsidering that. I mean, we don't really know because they haven't come out with like an updated guidance. I mean, that was more something they proposed in a public consultation. So it wasn't like a firm law or anything, but they wanted feedback from the market. And I think the market was pretty clear that, hey, this is a pretty bad idea. So that's kind of the main thing in Brazil at the moment. We're still kind of waiting on some guidelines to come out on that in the second half of the year here. So it's a bit up in the air. But I do think that you are getting a lot of interest in like these USD peg stable coins, right? I think in Brazil, it's something like 90% of all crypto volume is USD stable coins. The majority of that Tether. Those circles got a little bit of a play here, but with USDC, but it's predominantly all Tether and most of it's on Tron. So anyway, there's a lot going on here, but I mean, I will say that where it's like 2-3 years ago, a lot of the stablecoin activity was in the region was, maybe we'll say, like for reasons that are maybe not like use cases that are like questionable, right? Maybe we'll put it that way. Gray area use cases. But I think now what's really interesting is you're finding a lot more product market fit for like with like real businesses using these things for cross-border payments, etc. Like there's a real product. I mean, this is probably the part of crypto that has the most product market fit right now in all of crypto, aside from maybe Bitcoin as like a hedge against the world imploding or whatever, right? But in terms of product market fit right now, where real people are using it and getting real value out of it that they couldn't find using some other channel, the stablecoin cross-border payment thesis, especially in this part of the world that's very sort of on the fringes of the correspondent banking system, you're finding some real product market fit there, which is amongst like real, like sort of legitimate businesses and whatnot. So that's actually really exciting to see. Maybe I would like to hear Ben's perspective on some of this, since I know you guys are sort of on ground zero with a lot of these things.
I mean, so is Dave. Dave's a MXN stablecoin issuer as well with MXNE, and so he can weigh in just the same. The original stats were kind of about crypto broadly, and then I guess some about stablecoins. So I'm not sure if the commentary, if we're focused more on sort of general crypto adoption or stablecoins. I'll assume stablecoins, and at least our take on it is that the same way that like today, at least USD stablecoins aren't really primarily for Americans, because Americans largely have a financial system with the dollar that works pretty well and is easy enough for the majority of them. And so I know that's an overstatement and generalization, but like there's greater usage outside. It's not really all that different from that and the idea around local stablecoins. However, I have a thesis that there's one big difference in terms of like what to expect with, and this isn't just LATAM. I would say this is just local stablecoins generally across the whole world, which is that if you look at how USD stablecoins grew, they followed a grassroots, like retail to institutional curve. And I think we're at the institutional point now, right? It started with retail that fit some very specific use cases for retail. Institutions, banks like wouldn't touch it. Thought it was, rat poison. And then now they finally come around. There's regulatory green light, and so now a lot of these institutions can't move fast enough. Like Fran was talking about the boardroom. There is a 1,000 boardroom conversations going on right now. Well, what's our stablecoin strategy? And there's consultants are being well fed right now, and I think that's the USD arc. My thesis is that the local non-USD stablecoins, which just serve a different piece. You can't even compare it on the same lens because of the place that the dollar holds in the global financial markets, but that it will follow a reverse curve. It will follow an institutional to retail / grassroots arc. In the countries we operate in, Mexico and Brazil, at least for the stablecoins that we issue, Bitso operates in Brazil, Mexico, Colombia, Argentina, but we issue in Mexico and Brazil. We're partners in BRL1, which is a Brazilian real stablecoin. They, say what you will. There's issues, and certainly Aaron is very close to the things going on in Brazil. But like, you can have a bank account. SPAY, the interbank transfer system in Mexico, works pretty well. PIX works great. And so, with that said, the thesis and what we think we're in the early innings on is that those same institutions that are now getting a USD stablecoin strategy, these are big, sophisticated financial institutions, and they're global. They tend to be global, or they have global operations or global interactions, global client base, so on. And so it's inevitable that after they get comfortable with their USD strategy and they've onboarded it and they have their compliance processes so they can do what they need to do with USD stablecoins, they will cast their gaze farther afield and start to say, okay, now we need a peso stablecoin. Now we need a real stablecoin, et cetera. Now we need a euro. And that will follow the arc, and that actually the retail in these markets will be the last shoe to drop. So hot, not really a hot take, but prognostication on that front, I'll lay out there.
Dave, I don't know if you want to chime in on that as well before we shift gears.
Yeah, no, I totally agree. I think we're completely aligned here. I think we just coming off a round of fundraising, and so I have both the positive and negative experience of talking with a lot of VCs about this. And every time I left a discussion where someone said, "Oh, we don't have any evidence that local stablecoins are going to work," I just felt it was very nearsighted. If there's this new technology that's going to take over the current rails, it's inevitable that local stablecoins will follow, in my opinion, because they are the counterparty. They're the last mile. So the stablecoin sandwich is tolerable today. This process where we FX to get in and FX to get out. But as everyone becomes accustomed to it, they're going to start demanding things to happen in their own currency. I say this use case, if I'm in Mexico in the future and I want to go right down the street to a kiosk and buy a soda, I'm not going to want to pay money to FX out of my bank account, which is, the legal nature of having a bank account in Mexico, and then FX into the dollar and then FX back out to the payment provider. I'm going to want something in my own currency. So I think it's a new use case we haven't quite explored yet. We're seeing tailwinds now. We're seeing people think about it. But I agree with Ben. It's the institutions who do a lot of business cross borders who are starting to wake up and see, man, the US space is crowded. There is a play there, but a lot of the revenue opportunities, a lot of the ways to drive efficiencies are when we convert money from one currency to the next and off ramp and on ramp into that country. So completely agree.
So earlier, Ben had a spicy take. I've got a spicy question. What is the main demand for USD stablecoins in Latin America by retail? Is it more stable store of value? Is it better for cross-border payments? I think this is kind of like a touchy subject that nobody wants to talk about. But I think that, to address the problem and for countries to be able to dominate with local currencies, it is a question that has to be answered. So curious if anyone has a take on that.
I mean, I can tell you what we see from our perch as an exchange, and of course the answer isn't going to be as satisfying, which is that it depends, and it depends on the market. We all know the Argentina story. It's like the prototypical country that's held up, which it's not even really true anymore, but say 2 years ago, 3 years ago, or whatever it was. Or you could take Venezuela, or you could take Turkey, which is hyperinflation and wealth preservation. Sure. But that's not the case in Mexico. That's not the case in Brazil. They're mildly inflationary to the dollar, but not anything that like has your average citizen worrying about, getting out of their local currency as soon as possible. So in those places, it's a little bit different. It could be a mix of crypto trading. The cross-border payments is the big one because, like Dave was saying, or at least that we see, right? Bitso has an exchange. Bitso then has an arm called Bitso Business, which is a big cross-border payments player involving stablecoins. We on-ramp and off-ramp. And it is still pretty much all traditional stablecoin sandwich, fiat to USD, stablecoin to fiat. And that's just because the liquidity is there. Like you need the best FX and the most liquidity. And today, that's with the USD stablecoin. Even if the two fiat currencies on either side of the sandwich are non-USD, you're still probably better off today going through USD. And so there's a lot of demand in these countries from remitters or receivers for USD for that reason. But again, like there's some real reasons why that could change over time that Dave alluded to as well. But unfortunately, the unsatisfying answer is, at least from what we see, is that like these countries are very unique individuals. There's zero way to like lob LATAM into one, which is a great thing, right? Which makes it super interesting. It's the variety is the spice of life.
I appreciate the take. Go ahead, Aaron.
Yeah, I would just say, like from the Brazil perspective, you're really seeing usage of these assets from, it's really more of an institutional play. Like it's very rare to find like retail people just using these for, crypto trading is one thing, right? That's obviously always been the main use case of stablecoins, but you in countries that you have like very well built and established like instant real-time payment networks, like in Brazil, and I think Mexico there's one as well. A couple of these countries have deployed these, like in Brazil you have Pix, which is kind of the big success story, and you don't really have the need. I mean, you're already able to pay somebody instantaneously anyway for free, just scanning a QR code. So there's not really like a huge use case for, I would say like retail payments. There is a really interesting, we've been talking mostly about kind of B2B use cases here on the payments front and whatnot, but I was at Blockchain Rio a couple of weeks ago, and it was really interesting the amount of like consumer like stablecoin apps that have been taking off here, have been getting really popular. So you have things like Cast and like Red Dot Pay and some of these other things that they're basically trying to be kind of this like global wallet, like stablecoin wallet, right? Where you can have your fund, keep your funds in USDT in this wallet, and then wherever you happen to be, you can, if you're in Brazil, you can just pay, you can pay with the local merchants via credit card networks or via Pix. And it just converts automatically from your USDT into the local currency. The merchant receives local currency. And then if you go to Argentina, you can do the same thing there. You can just pay with your USDT, and the merchant just receives based like a Visa payment or whatever. And you're seeing a lot of uptake amongst these types of products, which is pretty interesting. Even a lot of the exchanges are rolling out some of their products like this too. Like Binance Pay is now integrated with Pix in Brazil, so you can pay, via stable coins for things here in Brazil through Pix with a Binance app. Bybit Pay has the same type of thing. I don't know if Bitso. I would assume that Bitso probably has something like that. I don't know, but maybe Ben can talk about that.
You do.
But you do, yeah, okay. So, because you're seeing a lot more of these things have kind of existed for a while, but they haven't really been that popular. But I noticed that just looking around at the booths at Blockchain Rio and the stand, like the guys that the stands that were offering these consumer kind of stablecoin app products were like packed the whole time. Like people were like really excited about these products, which is interesting because you're getting. This isn't a product that's like applicable to your kind of normie user in these countries, but for like crypto whales who have made, they've got big pools of USDT and they can't really do anything with it without off ramping. For them, it's like it's a very there's a good product market fit amongst that customer base. So you're seeing a lot of uptake in those types of products now as well, or at least that's what I'm kind of seeing on the ground here. So I would just, and I don't know how that, if that's translating to other parts of the region as well, but you're definitely seeing a big uptick in these products in Brazil.
It's a good call. I do know that REID, like Brazil is a super strong market for them, and they're based in Singapore, I think, but they have like a massive growth in Brazil. So I guess we could speculate on.
Yeah,
the
they
reasons.
told me both the Cast and Red Dot Pay guys were telling me that Latin America, Brazil is like their fastest growing markets right now. So there's kind of an arms race here amongst these sort of global stablecoin wallet apps.
So a bit of a segue, but obviously the growth of stablecoins relies on increased liquidity. So I wanted to go to Dave to talk a little bit about stable bonds. You actually tweeted recently, stable bonds are the future of foreign exchange on chain. What are stable bonds so yeah, like talk a little bit about like what is that? If no one's ever heard that term, like what exactly is a stable bond? How does it help with liquidity? Why is it important?
Yeah, so full disclosure, that's our primary product, and stable bonds is a name that we just coined. So it's like something we've been made up.
Get the domain if you haven't yet.
Yeah. Oh, yeah, exactly. Yeah, I have it. Just kidding. I don't yet, but I'll get it soon. But it comes along with the idea of like across the world, we think that there will be with time a regression towards, right now it's the world works 57% about in the US dollar and the rest of the world works in other currencies. There will be a regression to the mean there. The issue with foreign currencies is they fluctuate quite a bit and can, and there's not this like broad trust in it. And countries have shown, different countries have shown their ability or inability to address those needs that create the, inflationary aspect of their currencies. So what we do with the stable bond is it's really just we collateralize fully the short-term treasuries of these different countries. So in Brazil, we take their LTN, their fixed rate LTN, collateralize it. In Mexico, we take their CETES, the other 30 assets that were on board in Q3. It's the same thing. It's their most liquid, shortest term treasury collateralized. Then we issue a reward bearing token on chain that matches that rate that's continually compounding. So within the product is the yield. And I believe what will happen is that will be the way that we provide the depth needed to make it more efficient to bring FX on chain by coupling the yield to combat in some cases the fluctuation of the currency. We can create like a comparable store of value to the dollar, and we also bring kind of pressure. So if you're a country, you seem to have less incentives at times to tackle inflation. You're willing to deflate your currency or inflate your currency because your population's stuck with you, but your treasuries are your main source of revenue, and so you need to ensure that that is an investment, an appealing investment. So by issuing that as a type of stable coin, we've created a mechanism where you can buy, sell, pay, LP, lend against in the interface of the stable coin, but it is that treasury. and something that can be pretty trustworthy. So the reason we think it's the future is FX requires a lot of depth at times, an order book with a lot of depth, a lot of LPs, and people would be more willing to hold volumes in the treasury of that currency as opposed to the currency. And that creates a great pair for a local stablecoin, if that makes sense.
It does. It does. And Fran, I don't know if you want to chime in. I'm kind of curious to some degree if there's some parallels there to Stabull as well.
Well, I mean, firstly, we'd love to have all tokenized bonds on Stabull, and then you can have a secondary yield from the swaps that occur between those bonds and USDT, compounding those interest rates. I'm sure we'll have long discussions over tacos in Mexico, Dave. On the adoption front for Latin America, there's some key drivers. The legacy system can be full of friction. There's also a significant amount of underbanked citizens across Brazil, Argentina, the entire Central and South American continent. So if they can quickly get a web-free wallet or even an exchange, then a lot of users seem to be kind of using their exchange accounts as a quasi-bank with some kind of payments extension, like a MasterCard for Ditto banks or some other neobank player, or the exchanges themselves offering such services. There's still a significant amount of people that don't have ID, don't have bank accounts, etc., but they're sophisticated enough and they have jobs and all the rest to be able to just sort of leapfrog and use the next generation of technology, which I think is a big driver. Also, I used to sit on the Reserve Bank of New Zealand's forum for central bank digital currencies. So I've seen what all of that looks like from the inside. And this is why I think that the Genius Act was passed as quickly as it was, because unless you have a permission as a corporation,
Oop, Fran, we might be losing you, getting a little bit of a very low volume from you.
Sorry, just saying, with the Genius Act, it basically gave a blessing and permission for corporations and private sector to experiment in tokenizing stable coins, which is a preemptive risk mitigation against the risk that is CBDCs, in my opinion. If there was absolutely no adoption of non-USD stable coins, then it would be a lot easier to roll CBDCs out. So I'm happy with the range of exploration that's occurring. And I think this year we're going to see, the next 12 months, the adoption of non-USD stable coins, because the infrastructure is now at a point where it's simply easy enough to use it for day-to-day life. The exchanges, the banks are going web-free and integrating web-free, the payments providers, the neobanks, the infrastructure as a whole is getting to a point where it's much easier to onboard and much easier to teleport value in whatever currency, or to generate savings and take loans and mortgages and all the rest. So it's the great transition from analog to digital, from legacy to web-free.
Elon, you asked in the beginning about interest rates, my view on the Powell news, and I think treasury rate tends to be like the reference rate that I feel like the stablecoin world thinks in, at least in some level, just because that's obviously how Tether and Circle print their revenue. But unless you're following LATAM, you might not follow that. Like on Dave's stable bonds, the CETES rate is close to 7%. Like his CETES token pays 6.2% APY. And even more than that in Brazil, the Selic rate, which is more or less the equivalent, is 15% right now. And his stable bonds pay something close to that. And so that's just not something that to the point of idle cash and earning yield and stuff like that. I think there's also not probably as much awareness broadly about those types of yields on still relatively not risky currencies. Like actually, if you held MXN over the past 6 months versus the dollar, and you were earning that, you would have gained 20% on your holdings, because it's not true that the dollar just always gains on everything. And in the past 6 months, actually, MXN gained 20%. But then you'd also earn that yield share. So, anyways, I just think there's not probably a lot yet of awareness of the type of rates that can be tokenized, can be put in a tokenized form and made available. And I think people are sleeping on what Dave's putting together over there.
Yeah, quick follow up. Oh, go ahead.
Oh, I was just gonna say quick, it's kind of a joke in the crypto community here that like Brazil's greatest export is its interest rate. At this like 15% for the risk-free rate is pretty tantalizing. But it's difficult to get access to, right? And via traditional rails. So that's I think where some of these tokenization and stablecoin conversations get really interesting. Is 15%. I mean, people have been. I've aped into like DeFi protocols that were paying less than that were way sketchier than buying holding Brazilian government debt. So anyway, so there's some interesting opportunities there that I think will be compelling to people once they have easy access to them and once they know that these opportunities exist.
I appreciate that. It's a lot of hard work to get to this place, so it feels good to hear from people I respect a lot, positive news. So, and I know we're running up on the hour, but I just did want to say, if you're anybody who's anybody in LATAM, you need to be at this Bitso event next week. So hopefully we can at least give some time to highlight that conference coming up.
It feels like this is like a dry run for it anyways. Half of us are gonna, at least half of us are gonna, if not more, are gonna be there. So, and some of us on a panel together. So this is a dry run. But yes, it is coming together. I appreciate all the mention of it. It is to pull my Donald Trump. It is the quotes hottest event, certainly of next week, but of probably the season in LATAM. It's just coming together really well. I'm joking, but it's coming together really well. There's a lot of excitement. I know my LinkedIn's kind of filled with it. It's probably shows some bias, but there's some great panels coming together. There's a great group of companies. I had somebody earlier say that everybody in LATAM DeFi is going to be there. It's perfect. Everybody I need is going to be there. And that's kind of what you want. I don't know, for anybody who went to Stablecon in New York, I kind of felt that way. Like it wasn't token 2049, right? There wasn't 50,000 people there. There was like 1,000, but it was the 1,000 right people. And I thought it was extremely productive. And I think we're optimistic that this conference is going to be the same way. And it doesn't hurt that it's also in a Mexico City, which just provides, in my mind at least, a fantastic backdrop for an event like this. There's so much cool stuff to see in the city. I actually signed up to host a run, which I'm going to live to regret, but at 7 a.m. on Thursday morning, the second day of the conference, just because there's an amazing park in Mexico. Crypto fitness side events at crypto events are hot, and so I figured we needed one. And all of a sudden we're closing in on 100 people joining us for the run. So if anybody wants to jump on that too, I won't pressure you, but you're welcome to jump on that as well. But I appreciate the kind words. Hope to see everybody there.
Yeah, I've been looking at that running event. I'm like, man, I should probably sign up for this, but I don't know. I haven't really been doing a lot of running lately, so I'm a little scared, but maybe I should just suck it up. But yeah, I think it's gonna be a really cool event. And I'm excited to be a part of it. Like Brazil Crypto Report's a media partner for it. So appreciate the invitation and excited to be a part of it. And yeah, so we had my first ever stablecoin conference, and people have asked me like, what's it going to be like? And I'm like, well, at least in my head, it's like gonna be a polar opposite of a 2017 ICO conference. It's the way I'm sort of thinking about it, right? So this should be a pretty unique experience as far as crypto conferences go. So hope to see many of you guys there.
Yeah, so quick plug, August 27th to 28th, Mexico City. The conference will have icy cold air conditioning as well, if anyone's concerned about that. But we are at the top of the hour. Really appreciate you guys hanging out. Didn't get to cover all the topics, but wanted to kind of just leave off with a fun one. Look forward 5 years, all the hard work that you guys are doing. Give a 30 to 60-second answer to what does the stablecoin market in Latin America look like? So 5 years from now. Why don't we go to Aaron first?
Yeah, it's a great question. I do think there's going to be this tension between like stable coins and these nation state issued sort of real-time payment systems, right? Like there's going to be, but at the same time, like I think crypto people have very cleverly been able to figure out how to take these systems like PIX and basically hack them and use them, use stablecoin rail as, use stablecoins like along these rails that the central banks and regulators have built. So I'm really interested to see how that continues to progress, right? And I think, with like some political shifts in the region, there seems to be more of a political shift toward like more like right wing, like conservative governments that are presumably like more pro business. I think this region's like set up pretty well, and I mean I think there can be a lot of value delivered to businesses and whatnot in the region. So I hope this trend continues, but I think we're seeing, I mean I'm really encouraged that this is like one of the few areas that we in 2025 we can point to in crypto and say like there's actual product market fit here that we've found, and I hope that just continues to blossom.
All right, Dave, you're up next. 5 years from now.
5 years from now, I think most like cross-border payments are through stablecoins. If you look at Bitso, I think Bitso right now does 23 billion. That's like a fourth or 30%. Ben would know better than me. So it's already taking off, but I think stablecoin adoption will continue to grow. So the primary use case for blockchain will be cross-border payments. That's my take. I think 10 years out, it's going to be you won't even know what you're using, but it'll all be blockchain driven.
Extremely biased take, but I also agree. Ben, what do you think?
5 years out, every LATAM country that has its own sovereign currency will have 1 to 2 established, accepted, robust, trusted stablecoins that represent the currency that are the primary tokens that are used in on-chain FX. Almost all FX trading and transactions, not almost all, maybe not in 5 years, but a large chunk of it has moved on-chain, and those are stablecoins are used to represent the local currency. And the majority of wholesale finance, think like I'm a importer in Singapore who needs to pay an auto parts supplier in Mexico, and I deal with settlement risk and delays and escrow. Almost all of that moves into atomic settlement via stablecoins, which does not make sense always. In fact, most cases to use a USD stablecoin, and local stablecoins are heavily used in those use cases. Retail, I don't know. Who knows where that'll be in 5 years, but I'll call it on the business side.
All right, Fran, you're up last. I think you have to give the most outlandish or conspiratorial take.
Okay, well, I mean, firstly, it'll be like Intel Inside. Grandma's not going to know what she's using. She'll just log into whatever bank, neobank application, etc., to make her payments. And most retail people will just, have a currency displayed, and the complexities of DeFi will be obfuscated away. I also think that we'll probably see some sort of white swan events where we might see a move back to the gold standard for the USD. And I know a lot of people are going to gawk at that because they love Bitcoin, and I think they're complementary and parallel to each other. And so then that's going to overhaul and what happens with USD denominated stablecoins. And then the decentralized stablecoins are a big question mark. Right, so algorithmically collateralized stablecoins for whatever, the Mexican peso, Argentina, USD, etc., and how do they fit in to the ecosystem? It's all one big mesh network, and I think that that entire stablecoin DeFi ecosystem is, basically in. Sort of like if you look at a spectrum, you got algorithmic stablecoins on one end, you got CBDCs at the other end. So it's a fight between decentralization and centralization at the sort of highest level. And in the middle, you have, smart market operators that are in the middle, compliance, operating within the bounds of regulation. And meanwhile, over the next 5 years, we're going to see hopefully more and more deregulation and more return to common sense political parties that offer policies that actually benefits the citizens. Crazy idea, I know, but it seems to be a global trend that people are just sick of being run by corrupt officials all over the world.
Reasonable take, not outlandish at all. Well, thank you, everybody. Glad you guys got a little bit of a practice run for the conference coming up in about a week. Appreciate you taking the time to be here, record this live space. Thank you for everyone who listened in live and is listening to the recording. We'll be back in a few weeks with the Stabull team, of course, talking about stable coins, and really appreciate everyone for tuning in today. Have a wonderful weekend. Take care, guys.
Thanks,
Bye,
Board.
all.
Thanks,
Thank
everyone.
you.
Thank you.